Steve and Mary Allen asked the question in yesterday's comments. Ken's, what is your opinion on the August and September seasonalities? These are typically the worst time of the year for the indices. I just wanted to say, I see you. Every like, every comment, every view, I don't take any of it for granted. Thank you for being part of this journey, and thank you to Steve and Mary Allen. We'll address this particular comment in this video. Having a look at the major market indexes between June and August is referred to as the summer doldrums. And when we look through August, we can see there's a little bit of red and a bit of green, but 41% of the time it's been negative. This is in contrast to July, which is only less than 30% negative. And if we look into September, just running the stats, we can see the negativity is around 43.75%. The thing to bear in mind, it's not like January, which is basically 65% negative. To our 16,000 plus strong community, we are not just traders and investors, we are builders of mindset, of wealth, of purpose. Thank you for showing up each and every day. Return for the end of July. Now, if we look at that, does that bear out with what we've seen inside the charts? We can see at the current time, we are actually in an uptrend. For the last month, from July into August, we've seen a 2.31% return, and from June into July we saw a 7.51% return as well. This is why I always go directly into the data sources. I love different tables, definitely, but you must make your own analysis. I talk about this extensively inside the masterclass. So going back to this analysis, if we see positive, we generally get a follow through on that. Negative, a follow through. Positive, there are some mixed, and this is something to just be aware of. But basically, trend continuation is pretty much the order of the day. Let's go across and have a look at Bitcoin. Again, we're doing the same kind of analysis. And if no one told you today, you're doing better than you think. I'm honored to be a part of your path. And thank you for being here and sharing this time together. When we look at Bitcoin and we look at August, we can see that trend continuation. So how do we actually look at the price? The answer for us is really straightforward. It is structure. If we're getting into overhead structural resistance, we're going to, in all likelihood, reject and come down. If we're above structural support, we would expect a rally forward. If we're in part of a cycle, which is vastly negative, and this was vastly negative, it doesn't really look like much. In fact, it just looks like a bit of a blip, but if you were here, that was literally an 85% drawdown in Bitcoin. The alt just bled. Back in 2020, I put out the KS model. Now, the KS model divides Bitcoin's behavior into three areas: bull market, bear market, and consolidation. Bull market, bear market, consolidation. Bull market, bear market, consolidation. Before the KS model, people were just looking at a bear market and just applying bull market psychology. This is nuts. Now, why is it nuts? Well, if you think about a really big increase in price, so many people are excited. Basically, millionaires are getting printed overnight every night. That is a bull market. But in a bear market, people are losing their shirts, and not in a good way. To make it easier, I call the bull market the sun and the bear market the moon or the night. And of course, consolidation is the dawn. In a bull market, we can get really harsh drawdowns, 20, 30, 40, even 50%, but they are very forgiving because the momentum is upwards. As we are currently in the bull market phase, yes, we're going to get drawdowns, but we expect upward price momentum until that fails. And we haven't seen any blow-off top. Blow-off tops are very, very common in bull market cycles. We haven't seen anything like that, not yet. When we talk about seasonality, we've got to be very careful what part of the market we're actually comparing against. Is it a bull market? Is it a bear market? You can't just go down and say, August is always bad. I mean, there is a bit of red in August. That is correct. But it largely depends on what type of market we're in. We are in a bull market. So if you're expecting wildly negative responses from the market and you get something wildly positive, how are you going to address that? Our solution is really quite straightforward. We do the cheat sheet, we look at structure. We're aware of all of these other things, but we always pay attention to what the market reality actually is. And in terms of August, overall it's a bit negative. Now don't forget, some of these big percentages will drag this average down, as well as the fact that some large percentages will boost this average up. The way that we keep ahead of the market is just to understand how market dynamics actually work, and the cheat sheet is your absolute superpower when it comes to understanding that. We'll really quickly go through row 1, row 2, all the way down to row 7. If you're new, a very warm welcome, and row 1 and row 2 are all about risk. And row 1 and row 2 spur row 3 to either go up or down, and row 3 is the thing that decides what happens to row 4. Row 5 is dependent on row 3, and row 3 is dependent on row 5. And both are dependent on rows 1 and row 2. If we get positive momentum across row 3, we expect positive momentum across row 5. If we get positive momentum inside Bitcoin and total, we expect the alts to do way better than Bitcoin. But if Bitcoin and total are coming down, do not expect your alts to outperform them. In fact, they're likely to bleed. The markets 24 hours ago were looking really bad, and I suggested that we were likely to get a bounce, which is exactly what we got. So that bounce, is it likely to continue? Well, we need to look at structure to see where the structural support and structural resistance levels are, as well as understanding the momentum. When looking at risk, we see that we've had that bounce up. Now, what happens around here is very important. If we start to break across, and this is the S&P 500, you see Bitcoin is the blue line. If we start to break out of that 6,400 range, that is very positive. If we tap this and reject down, that is negative. US liquidity at the current time is not going up, which is a good thing, because basically when US liquidity just pumps itself up, it's in response to a downtrend. The government tries to maintain upward momentum in the markets if it can. Looking into row 1, which is the VIX, the 10-year, the 2-year oil, dollar yen, and the DXY, we can see that the VIX indeed did come down, and that very big drop in the VIX was responsible for giving Bitcoin, which is the blue line, a big surge up. And we know where Bitcoin goes, guess where the markets are going? They're going up as well. Global tariffs have absolutely upset the apple cart in terms of just what is related to what at the current time. But one thing is shining through, the VIX is a very good indicator, and if we just invert this, we can see that the VIX is potentially going to surge up a little bit today. Why is that? Because Bitcoin is already just telling us there's weakness inside the markets. This reading is pretty interesting because if you look at Bitcoin, see that divergence, and these are the S&P 500 futures, the Dow futures, the Nasdaq futures, and the Russell futures. All of this would suggest that we would have a lot more upside momentum inside Bitcoin. Just keep your eye on what's happening with the futures. When we see divergences between the futures and Bitcoin, it's a thing that we must pay attention to. Going into row 2, which are junk bonds, the euro dollar, the Aussie dollar, gold, silver, and copper, we can see that junk bonds has been recovering. That was a really big falling off a cliff, but we can also see that Bitcoin isn't buying a continuation in the recovery, at least not yet. The key now is to just monitor how the futures react and interact with Bitcoin. Is Bitcoin that leading indicator, or is it just lagging? These are things that we often have to deal with. One good thing that we see with the increase in gold, increase in silver, this just typically just transfers into an increase in Bitcoin as well. So we're seeing some positive stacking up. Also, Dr. Copper on the monthly has not lost its trend. If we get continuation of the futures in terms of the S&P 500, the Dow, the Nasdaq and the Russell, that will naturally just associate itself into the crypto market. When looking at row 3, which is not the futures but the actual S&P 500, the Nasdaq Composite Index, the US Russell 2000 and the Dow, we've seen that big upsurge here, and we were anticipating a bounce when everybody was saying the whole thing is going to fall into the toilet, and it didn't. The one thing to understand, today is a little bit less certain. Keep your eyes on the structural levels of Bitcoin and total today. There wasn't much of a bounce in Apple, and Tesla had a decent bounce, and Microsoft really did well, Nvidia did well, and this is row 4. Having a look at row 5, which is total crypto market cap, Bitcoin and Ethereum, what we can see is the total crypto market cap did a very nice bounce. In yesterday's video, we were down here, so we got a very good bounce. Bitcoin also bounced up, ETH bounced up. Pepe was a bit of a pain in the butt, it didn't realistically do much. Looking at Bitcoin from a structural perspective, Bitcoin is currently $115,251, and we can see down here at $113,900 there's structural support. A little bit lower around the $113,400 there's structure, as well as the $112,860. We have our big areas of overhead structural resistance around the 118,000 mark. If Bitcoin starts to turn around and starts to reflect the upward surge in the futures of the main market, we could fill this gap rather quickly. But we know there's a little bit more to it than that. With the positive CTKS gap, you may have thought that Bitcoin would just go to the 119,000 just instantly. But there's another thing that people who are experiencing the CTKS method understand. Bitcoin and total move together. So when we look at total crypto market cap, it had a variety of different structural overhead resistance levels, and this one around the 3.7 was a bit of a doozy, and that kept Bitcoin from going up as we would have liked it. Now, we have seen a retest of this total crypto market cap structural support. This is looking fairly positive at the current time. And especially if we see Bitcoin starting to turn around and sink in with the futures, that's a chart that you should keep your eye on. In terms of liquidations, we've not really seen that many liquidations. 232 million is not that much. And we've seen that the majority of liquidations were short. It certainly took out a lot of different positions, over 88,000. At the CTKS method, we're all about just mastering spot before you go anywhere near leverage. Now, why is that the case? Please leave your comments on this one. It's a really important thing to discuss because most people want to leverage up without that much knowledge. And if you've had experience with prop firms, please leave some comments on that. Looking into row 6, which is Litecoin, Bitcoin Cash, Binance Coin, and Ethereum Classic. Now, why do we look at these? Litecoin and Bitcoin Cash are Bitcoin proxies. Ethereum Classic is an ETH proxy, and Binance Coin is a proxy for centralized exchanges. Now, what does this mean? We typically see an upward surge in Litecoin and also Bitcoin Cash to confirm an uptrend in Bitcoin. Now we're seeing something rather interesting here. Bitcoin Cash is actually going down, whereas Litecoin is continuing on. Bitcoin Cash is throwing a very similar signal to what happened with the VIX and Bitcoin. Therefore, to see if Bitcoin is starting to turn around, let's keep our eyes on Bitcoin Cash today. One thing to also understand, Litecoin has a large degree of structure above the current price, and Bitcoin Cash came through multiple levels of structural resistance and is now currently under them. We need to react to price as it prints, but one thing to just understand, structure is phenomenal in its predictive capability. Looking into row 7, we can see that ADA has come up through different levels of structure. It has a positive and negative CTKS gap in between 74 and 75. So there could be some really good trading opportunities in here. We can see Solana around the 170 mark has a bucket of overhead structural resistance, and this is something that you need to keep in mind. Doge has been released inside the service yesterday. We've got some key levels playing out here, one around that 2446 mark and the other around 2659. So long as we hold those two levels, Doge is fine. And we can see a similar thing with XRP. XRP has a level at that 307.36, which must be overcome in order to go higher. And we're seeing some reasonably decent levels of structural support below. My advice to you on this particular day, keep your eyes on the futures on Bitcoin, but especially Bitcoin Cash and Litecoin. And it doesn't matter that you're not trading them, they'll give you an edge. And just to give you an understanding of the Litecoin overhead structural resistance, it's coming into a lot of overhead structure. And when we saw Bitcoin Cash just pile up through all of these structural resistance levels, we expect this kind of digestion, but not this kind of weakness. It's a little bit too weak for my liking. What I'll be personally doing is just keeping an eye on the futures and on Bitcoin and any gaps, especially directional divergences between them. I'll also be keeping my eye on Litecoin and Bitcoin Cash. Every time you make progress, even just a little bit, it's really important to celebrate it. That's how real change occurs. Our goal with Positive Excellence and the CTKS method is move our thinking from scarcity into abundance. Scarcity thinking is the way that the vast majority of people think. They think through what's called poor thinking. That doesn't mean that they're poor, it just means their thinking is not abundant. Wealthy thinking is very, very different. Wealthy thinking is not flashy, it's not showy, it's the real deal. Moving out of scarcity thinking is really important. Inside Zone 1 and Zone 2, people have scarcity as their default. This is where poor thinking comes into play. Rich thinking comes into play inside Zone 3, which is where people start to become consistently profitable. But making a lot of money without a lot of meaning is a completely empty thing to do. People don't realize that until they've made a lot of money. You can literally have it all, but it requires moving into Zone 4, which is wealthy thinking. The foundations of wealthy thinking are found inside Positive Excellence. Each one of these little boxes is like a do-be list, focusing on kindness and authenticity, but kind authenticity, not nasty. Having strength and boundaries is also important. A lot of people think that kindness is simply just lying down in the middle of a road and have the cars or bikes run over you. That's not kindness, that's stupidity. And it's also not required. You don't need to do things like that to be kind. Kindness is all about just showing your inner peace through yourself to create outer peace. How do we do that? By showing gratitude, by showing happiness, and real happiness and real gratitude is really important. Unfortunately, we live in a day and age where people do not have integrity, they don't have loyalty, and they don't have decency. Unfortunately, so many people have what is called negative excellence, and negative excellence is a don't be list. Now, why is this the case? A lot of people will say, oh, being dishonest and just putting yourself first, that's the way to go in life. You can't build anything sustainable on that specific mindset. With positive excellence, we're seeking to change the world, just one person at a time. As a community, we're all about you having your best life to achieve financial independence through the method and emotional mastery through positive excellence. You literally can have it all, but you do so in a way that doesn't harm other people. And you're wealthy and you're happy as well. That is anybody's best life. There were so many fantastic comments in yesterday's video about positive excellence. We have an incredible global family. We don't just analyze markets, we align with who we are becoming as the best versions of ourselves. In the comments today, I thought it would be really good to discuss wealthy thinking. You can see CTKS isn't just a method, it's a mindset, it's a way of living. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.